All right, so I'm gonna make a reaction video. I haven't actually watched this video yet, but apparently this couple lost over $300,000 day trading, and Ramsey's not happy about this. So I'm gonna go ahead and we're just gonna watch it together and just see. We're just gonna talk about it.
Liz is with us in Illinois. Hi, Liz. Welcome to the Dave Ramsey Show.
Thank you. Hi, Dave. How are you?
Better than I deserve. What's up?
Good. Good. So, we're doing our taxes, and last year for 2018, we had $316,000 in capital losses.
Oh my gosh, 316.
We were told that we could only deduct $3,000 a year on our taxes, but I did the math, and that would take 115 years, and I'm hoping I don't live that long. But our accountant said that he suggested opening a brokerage account instead of a 401k to utilize these capital losses, and I just wanted to hear your opinion on that.
Dave's not happy.
So it sounds like the type of losses that you have is what's causing the write-off, the inability to write them off, because you don't have any income that is of similar sources to the losses.
Right.
Yeah. And so he's saying open a brokerage account because the income on that then would be tax-free, utilizing these losses to write it off. Okay.
Right, exactly.
That's one way to do it.
Okay.
He's still thinking about that 300,000. He's not happy.
And I don't know, would you treat a brokerage like a 401k? You just let the money build, and then
Yeah, I mean,
at
you
what
could
point
you
would
could
be
put the money into a mutual fund, and the problem is that if you put it in mutual funds, a lot of the gains may not be taxable because the growth in value is not taxable until you cash it out, and so you're not getting any use of this. The brokerage account where you're buying and selling stocks, if you had a gain, that's all taxable.
So she's
in
trying to
that
figure
year.
out, I have all these losses. How can I
It
take
sounds like
advantage?
you've got you need
Find tax
short-term
advantages from these
income
losses.
on investments, not long-term capital gains on investments, to offset this. What was this from? What's the loss?
Yeah,
from?
this is what he wants to get to.
from trading.
Trading.
Trades.
Jesus.
Yeah.
That's
It
real.
was bad. It was a bad situation. My husband was diagnosed as being bipolar, but not until after this happened. And it just all happened within.
Maybe it was
6
the
weeks.
trading
It
that
was
made him
kind of a
bipolar.
manic
Yeah.
thing, and it was, very out of character and very upsetting, and obviously
What is your
devastating.
household income?
For last year, oh my gosh, it was only 38,000. This year,
Wow.
it's going up. My husband got a new job, starting at 50,000 plus, whatever bonuses.
Where'd you have 300,000 that you could lose?
We had it in an inherited IRA,
Oh, crap.
and and so he was originally. I had just had a new baby. I was having problems with pregnancy, so he started working from home, trading, because he was doing it and doing well with it.
There's no such
up
thing.
until he.
So he was supposedly doing well with trading. Has since ended up with over $300,000 of loss. Whatever you put into your account that you're planning to trade, you have to be willing to lose that amount. If you're not comfortable with losing that amount, then you should not be putting it into your trading account at all. Imagine if instead of putting in 300,000, they had put in 30,000 instead, and had taken the same kinds of trades. Well, instead of completely losing the house, they would have lost 30,000 instead. So they should never put that kind of amount in to be risking that much. They should never have put that in because the temptation would be there to trade and risk that amount if it's in the account. And I can tell that Ramsey here is about to
Well, yeah, up until he wasn't.
Yeah.
And
so Ramsey's not the type of guy that's going to like trading or probably even believe in day trading because I mean, because of stories like this, when people, so this person has lost $300,000. For people that are profitable in trading, and people that do find an edge in the market, for high frequency traders, for large funds that are able to pull out money from the market, right? Well, if they're pulling out money, then there's someone that they're pulling money from. Now, the large funds, they're pulling money from each other, right? We shouldn't think of it as, oh, these individual day traders are paying all these large funds. But for individual day traders, right, when you have someone losing $300,000, then that essentially is going to someone else's account. It's a net zero, right? In the markets, anything that is gained is lost by someone else.
So now it's just been trying to find.
78% of day traders lose money.
Okay, that's an interesting stat. 78% of day traders lose money. I think he meant to say 98. Normally the stat is like 90% to 95%. I think he meant to say 98%. And 98% is the actual number that I would go with. A lot of people will say 90% or 95%. But from the conversations that I've had, from my understanding of the market and its participants, I think for every 100 people that try day trading, I think only one or two of those 100 will actually be able to make it and be able to be profitable. And that's not even to be profitable enough to be able to quit your job and pull out money forever. That's just, you're profitable with what you're trading at that size. Right. So I think the percent that can really fully quit their job and just do trading, I think the percent is much smaller than even only 2%.
Yeah.
Statistically, that's called all of them. Okay.
Yeah. Yeah.
So don't even ever say that again, that he was doing well.
No, never.
That's like saying
Yeah.
I'm at the roulette table and I hit, so I'm doing well.
Yeah.
Yeah. Okay.
Yeah.
All right. Let's stop for a second. Dadgum, the inherited IRA was taxable. He pulled the money out and paid taxes on it and then lost it.
He must have, yeah.
Yeah, because inherited IRA is taxable when you pull it out.
Yeah.
The title is "Husband is a Day Trader." Maybe. I think maybe was a day trader would be a better title.
Okay, here's the problem. If we get too nitsy and nuanced and technical in order to get some benefit from this write-off, but it exposes him to the very beast that just about killed him the first time, I don't like that.
Mm-hmm.
So your husband being anywhere near a brokerage account sounds like suicide to me.
So that's what that is. A brokerage account is
A
similar
brokerage
to
account is an account that you have with a broker that you call the broker and you do trades.
Okay.
Which is the answer is no. Your husband does not need to be anywhere near that. I don't know in your household how you're going to create gains on investments to offset losses on investments to get the benefit of this that is substantial.
Yeah, that's the crazy thing. So what she's calling about here is she has these losses, and there are ways that once you achieve gains, you can offset those gains with losses from the past. So then effectively you wouldn't have to pay taxes. And that's what Ramsey's kind of thinking over. What are the nuances? Like exactly how would this work out? And ultimately, the general idea here is, with their income, what kind of gains could they possibly make in the market that they'd be able to take advantage of any of this 300,000 in losses, right? I mean, it would take them a lifetime with that income to be able to put enough into the market and have enough gains in the market to be able to offset $300,000 in losses.
I don't know how to do that. What I would do if I were in your shoes, before I put your family at further risk, playing with the same snakes that already bit you, I would just say, screw it. Forget it. It's just gone.
Yeah.
Okay? And
Okay.
but
Yeah, for sure.
before I completely do that, I want to ask a question if I'm you, because there's 300 grand on the table of
Yeah.
losses that we'd be nice to shelter income with. I want to ask
Hmm.
a different tax advisor than you have the same question. What other
Okay.
accounts qualify? What other investments qualify for this right? The returns on them qualify to offset this loss. I think, though, you're probably gotten pretty decent advice in terms of what technically applies, but it was bad advice when you pan back and understand the situation because your husband
Right.
doesn't need to be anywhere near a brokerage
No.
account ever
Yeah.
again.
No.
You
Yeah.
know,
Absolutely.
manic depressive people should not be doing trades. Hello, nobody
Yeah.
should, but
Yeah.
nobody should, but bipolar sure as crud shouldn't. So I'm so
Yeah.
sorry. What a horrible thing y'all
That's
been through.
okay.
So I think this is a good cautionary tale. This is real life. That's real money. There are people that have lost $300,000, and there are people that have lost a lot more than $300,000. So what can we learn from this? One that we already talked about. Don't put anything into your account, especially like if you're planning on doing futures or options, something leveraged. Don't put anything into your account that you wouldn't feel comfortable losing. Right? So if your net worth and your level of risk aversion are not in line with what you are actually putting into your account and being ready to lose, then you're doing it incorrectly. Whatever goes into that account, you would have to say, if that's gone tomorrow, I would not be. I might not like it, but it would not hurt me in my life if I lost that money. And I think that's an important first step. I think people starting out, they need to paper trade. They need to trade for 2 or 3 months and be profitable most of the weeks out of those 2 or 3 months. And after the 2 or 3 months, then be up by a certain amount. Right? They need to show that I can be up after 3 months, and I can have consistency where I'm up every week or most of the weeks, and the weeks that I'm down, I'm losing small. And if you after 3 months, if you can do that, if you can paper trade, and you can look at your data, you can say these are the strategies I'm using, and these are what's working. Then yeah, I think it's time that you could apply that in a live environment. And once again, whatever you put in, you'd have to be willing to lose that. Right? I think the husband here would have been $300,000 better off if he would have paper traded for 3 months and said, I'm down after 3 months. This, whatever I'm doing is not working. I need to find something else, and I'm going to give it another 3 months, and I'm going to try something different. I'm going to keep studying. If he had, this video was in 20, I think they said this occurred in 2018. If he had been doing this for the last 6 years of just continuously paper trading, I guess I bet he would have been frustrated. He would have been not happy with his performance, but that would have been a lot better than being down $300,000. So, Dave Ramsey, thank you for the video. Unfortunately, stories like this are true. So anyone watching, I want to make sure we can avoid any kind of sizable losses like that. All right, guys. If you like this video, if you like this reaction video, we could do more. Like the video and subscribe if you'd like to see more kinds of videos like this of me watching something and then commenting and giving my thoughts on it. Okay, see you guys.